Are any federal taxes being withheld from your Social Security check right now? If the answer is yes, or if you are not even sure, you need to stay with me before your next payment arrives, because here is what most people receiving Social Security do not know. The IRS does not automatically tax everyone's benefit at the same rate. There is a specific formula, one that the Social Security Administration and the IRS do not explain to you when you start collecting, that determines exactly how much of your benefit is taxable, if any of it is taxable at all. And right now in 2026, millions of seniors are having taxes withheld from their Social Security checks at a rate that is either higher than it needs to be, or that could be reduced or eliminated entirely, with one straightforward adjustment most people have never been told about. By the end of this video, you will know exactly where you stand, what the thresholds are, and what to do if you are paying more than you are legally required to pay. Before we get into the numbers, subscribe to this channel right now and turn on the bell. Here is why this matters specifically for what we are covering today. The income thresholds that determine how much of your Social Security is taxable have not been adjusted for inflation since 1984. Congress set those numbers over 40 years ago and has never updated them, which means every year, as Social Security benefits increase through cost of living adjustments, more and more seniors cross those thresholds and become subject to taxation without any change in their real purchasing power. What I do on this channel is track exactly these kinds of rules, the ones that were written decades ago and are quietly pulling more money out of senior pockets every single year, and explain them in plain language with specific numbers that apply to your situation. The people subscribed here understand how these rules work and can make decisions accordingly. The ones who aren't tend to find out at tax time, after the withholding has already happened and the money is already gone. Hit subscribe, turn on the bell, and let's get into it. Let's start with the foundation so everything else makes sense. Not all of your Social Security benefit is automatically subject to federal income tax. The IRS uses 3 possible levels depending on your income situation. Level 1, 0% taxable. If your income falls below a certain threshold, none of your Social Security benefit is subject to federal income tax. 0. Not a single dollar of your monthly check goes to the IRS. Level 2, up to 50% taxable. If your income is in a middle range, up to half of your Social Security benefit may be included in your taxable income. This does not mean you pay 50% in taxes. It means up to 50% of your benefit gets added to your taxable income and taxed at whatever your normal income tax rate is. Level 3, up to 85% taxable. If your income is above the upper threshold, up to 85% of your Social Security benefit is included in your taxable income. The IRS maximum is 85%, meaning at least 15% of your Social Security benefit is always tax-free, regardless of how high your income is. These 3 levels are fixed in law. What moves you between them is a number the IRS calls your combined income, and that calculation is where most people get confused. Combined income is the specific figure the IRS uses to determine which of those 3 levels applies to you, and it is calculated in a way that surprises most people when they see it for the first time. Here is the formula. Combined income equals your adjusted gross income, plus any non-taxable interest you receive, plus half of your annual Social Security benefit. That last part is the one that catches people off guard. Half of your Social Security benefit gets added to your other income before the IRS decides how much of your benefit to tax. It is not the most intuitive calculation, but it is the one that determines your tax bill every single year. Here is what the thresholds look like in 2026 for a single filer. If your combined income is below $25,000, none of your Social Security is taxable. 0 withholding, 0 tax on your benefit. If your combined income is between $25,000 and $34,000, up to 50% of your benefit may be taxable. If your combined income is above $34,000, up to 85% of your benefit may be taxable. For married couples filing jointly, the thresholds are higher. Below $32,000, 0 taxation. Between $32,000 and $44,000, up to 50% taxable. Above $44,000, up to 85% taxable. Here is what these numbers mean in real dollars. If you receive $2,000 a month in Social Security, That is $24,000 a year. And you are a single filer with $15,000 in other income. Your combined income is $15,000 plus half of $24,000, which is $12,000, for a total of $27,000. That puts you in the 50% taxable range. Up to $12,000 of your Social Security benefit gets added to your taxable income. On the other hand, if your only income is Social Security and it totals $24,000 a year, your combined income is just $12,000, which is below the $25,000 threshold, and none of your benefit is taxable at all. Here is where the real problem lives for millions of seniors in 2026. When you first sign up for Social Security, the SSA asks whether you want federal taxes withheld from your monthly payment. The options are 7%, 10%, 12%, or 22%. Many people choose one of these percentages at the beginning, often 10 or 12%, without ever calculating whether their actual tax liability on their Social Security benefit matches that withholding rate. And then life changes. You stop working. Your other income drops. You move to a state with no income tax. Your investment income decreases. Your spouse passes away, and your filing status changes. Any one of these events can push your combined income below the threshold, meaning less of your Social Security becomes taxable, or none of it does, but the withholding rate you set years ago keeps running unchanged. The SSA does not automatically adjust your withholding when your income changes. They withhold at whatever rate you originally selected and send the excess to the IRS. You get it back as a refund at tax time, but only if you file a return and claim it. If you do not file because you assumed you owed nothing, you may never recover that money. The form that controls your Social Security tax withholding is called the W-4V. It is a voluntary withholding request form. You can use it to change your withholding rate, reduce it, or stop withholding entirely if your income situation has changed enough that your benefit is no longer taxable, or is taxable at a lower rate than what is currently being withheld. This is something most seniors are not aware of, and that can meaningfully change the picture for people who live in certain states. At the federal level, up to 85% of your Social Security benefit may be taxable, depending on your combined income. But at the state level, the rules are completely different, and in the majority of states, far more favorable. As of 2026, 41 states do not tax Social Security benefits at all. That means if you live in one of those 41 states, your Social Security check is subject only to federal tax rules. And if your combined income falls below the federal thresholds we just covered, you pay no tax on your benefit at any level. The states that do still tax Social Security benefits to some degree include Colorado, Connecticut, Minnesota, Montana, New Mexico, Rhode Island, Utah, Vermont, and West Virginia, though several of these states offer partial exemptions based on age or income that reduce the taxable amount significantly. If you are considering relocating in retirement, the state tax treatment of Social Security benefits is one of the most financially significant factors to understand, and one that most people learn about far too late. Here is exactly what to do based on what we have covered. Action 1. Calculate your combined income. Add your adjusted gross income plus any non-taxable interest plus half of your annual Social Security benefit. Compare that number to the thresholds for your filing status. If you are below the threshold for your group, none of your benefit should be taxable. And if taxes are currently being withheld, you are overpaying. Action 2. Review your current withholding. Log into your My Social Security account at ssa.gov or check your most recent benefit payment confirmation. Look at what percentage is currently being withheld for federal taxes. If your combined income calculation shows your benefit should be partially or fully exempt, contact SSA and file a W-4V to reduce or eliminate that withholding. Action 3. Check your state. Go to your state's Department of Revenue website and confirm whether your state taxes Social Security benefits. If you live in one of the 41 states that do not, your state withholding on Social Security should be 0. If anything is being withheld at the state level, and your state does not tax Social Security, that is a withholding error that needs to be corrected. Do not wait for tax season to discover you have been overpaying. The adjustment takes effect within 1 to 2 payment cycles. Once SSA processes your W-4V, every month you wait is another month of unnecessary withholding leaving your check. Here is the full picture. The IRS does not tax all Social Security benefits equally. Depending on your combined income, your adjusted gross income plus non-taxable interest plus half your annual Social Security, none, up to 50%, or up to 85% of your benefit may be taxable. At least 15% is always tax-free. For single filers, the zero tax threshold is $25,000 in combined income. For married couples filing jointly, it is $32,000. If you are below those numbers, your benefit should not be taxed at all. And if taxes are being withheld, you are overpaying. The form that controls your withholding is the W-4V. You can file it at any time to change or stop withholding if your income situation no longer justifies the current rate. And 41 states do not tax Social Security benefits at all, meaning if you live in one of them and your combined income is below the federal threshold, you may owe zero tax on your Social Security at any level. Calculate your combined income today. Check your current withholding, and if the numbers don't match, file the W-4V before your next payment arrives. Subscribe, share this with someone you know who receives Social Security, and I'll see you in the next one.